Hey, what's up, Foreclosure Fix family, and welcome to another episode of the Foreclosure Fix podcast, where our goal is to help 1 million homeowners successfully navigate foreclosure. If that mission resonates with you, you know what to do. Like, subscribe, and share our content with someone who you know can benefit, because guess what? Today you are in for a treat. I got Alden Guajardo with me today from Silvercrest Opportunity Fund. He is a note investor. He is affordable housing expert, and he is doing some big things in the Arizona community. And I'm so excited to have him on to talk a little bit more about what he's doing, how to help homeowners facing foreclosure. And again, as I said before, you're in for a big treat. Alden, what's up, man? How you doing today?
Hey, thanks so much for having me on the channel today, DJ. We've seen each other at multiple real estate conferences. You know, you're an affluent individual out here doing your thing. So thanks so much for providing me some additional exposure and also doing what you do. You know, at the end of the day, there's a lot of people that are kind of facing some foreclosure issues, and what a blessing it is to be able to give away this free education. So I'm just happy to be here today, DJ.
No, man, thank you so much. And I think it's definitely the other way around. I'm probably kind of riding off your coattails and your success, man. So I appreciate that. And thanks for making time for the Foreclosure Fix community. So with that, Alden, do me a favor and give our listeners a little bit of a background about how you and your company intersect with investors and then people who may be facing foreclosure.
Absolutely. So I started in 2017, came on and partnered with my father as a licensed dealer of manufactured housing. So a fix and flip strategy on mobile homes, of all things, here in the Arizona market. And through our research and execution and transactions of buying, fix and flipping manufactured housing for cash, we saw the opportunity to start seller financing, which created a bank quality note, providing a double-digit interest rate, but also creating homeowners in the local market of Arizona. And through that seller finance strategy, we started gaining some great traction, doing quite a lot of deals, and have now elevated into raising private capital for lien positions, private lending, and manufactured housing. Through that vehicle, mobile mailbox money, selling our notes at mobilemailboxmoney.com. We got nimble, got great traction, and now we've started a fund. It's a 506c accredited investment fund with $50,000 minimums, paying 10% or better with terms as low as 1 year. And through our structure of seller finance notes, we have come across a great plethora of individual borrowers throughout our lifetime, and comes the nimbleness in trying to mitigate foreclosure processes for individuals that fall behind on their mortgages. If you do enough deals, at the end of the day, as a private lender creating homeowners as a haven, you end up having some non-performance. And for us, we're all trying to keep people in their homes at the end of the day. So through that strategy, it's been extreme blessings, to say the least. God is good all the time, and have met DJ at these different conferences. So that's just kind of a little bit of our background and how we got started in the business.
Man, that's phenomenal. Thank you for providing that background, man. And I do apologize. Sometimes these podcasts, you get a couple technical issues, but I hope they won't happen anymore. So in addition to that, right, one of the things you talked about in your strategy is that you guys are doing mobile homes. So guys are doing the crux of affordable housing, right? So why that strategy for you guys? When you think about investors who want to do multi-million-dollar homes, you all are doing workforce housing. You're doing it at a price point that the average consumer can afford. Why that strategy for you and your company, and what does that see? What has that done on the delinquency side because of that?
We kind of fell into mobile home flipping and fell into seller financing, and now we're in a state of emergency for housing. What a great whirlwind for us to be positioned where we are. I got approached at Arizona Real Estate Investors Association from an individual that was buying mobile homes and selling them to transport to other communities, which saw great hardship because you have to pay the transporter. You got to make sure the lot is regraded to its original condition, which created a lot of hardships where we saw a modified program of buying that home, selling it there, rehabbing it there and providing an end user, someone who can't qualify for real estate or really just is tired of renting, a quality, affordable unit in the local market of Arizona. So opposed to buying it and transporting it, we fix and flip it on the lot, find a qualified individual to buy that home. And as that business escalated, we fall into the affordable housing crisis, right? Which ends up being the solution in mobile homes right now. So for us, it's not a greater time to be positioned where we are, as it's the biggest need in the nation is affordable housing. Residential real estate has climbed to average purchase prices nationally of $400,000. It's never been a time like that where the unaffordability of a single family property has pivoted individuals to lifetime renters. For these individuals that fail to qualify because of the 7% rate and a $400,000 purchase, they fall into a lifetime rentals program. Whereas now in manufactured housing, it becoming a more palatable solution for a primary home for an individual that sees hardship and trying to qualify for ownership, not only here in the Valley, but also nationwide, depending on what kind of market they are. We see tremendous amount of opportunity to create homeowners out of individuals that wouldn't have originally, been penciled out for those programs. So we currently have homes in Mesa, Tempe, Phoenix, and Glendale, seller financing, providing individuals a match or beat market rent rate in these various markets. And we do that through private financing. So a lot of people don't know there's not a whole lot of financing on manufactured housing. Just quick gem, 21st Mortgage is one of the largest lenders on manufactured housing in the nation, and that's actually Warren Buffett. So that's kind of why we see this to be an opportunity, given the current financial crisis. But also, as we sell or finance these homes, it comes a component of individuals falling on hardship and being on the Foreclosure Fix It program. How do we kind of mitigate that from happening? Because if we go and do enough business, at the end of the day, we're bound to get individuals that are going to either lose their job or have a hardship financially or, even medically, and to be nimble within that strategy and know we're not in the business of taking people's houses back. So to be able to modify a loan in that program, provide them a workout, and we don't market that we do this, but through those transactions, we get enough that will, take the benefit of the doubt with a legitimate story, reperform the loan, maybe throw those fees on the back or something of that nature. Because really, as investors and our capital partners, we're in it for the long-term cash flow income. We have no interest in taking somebody's house. So that's kind of why we see it as an opportunity given the current financial market, as well as, also the emotional satisfaction we get of providing a needed solution out in the market, given the hardships, and also, providing our investors a double-digit interest rate.
Yeah. So, Alden, there's a couple things that you said there that really resonate with me. One, I think there's a myth out there that we always try to bust, but I think people just need to keep talking about it, is that you all don't have any interest in taking the borrower's home. Like that's not any concern for you. If you pay, you stay. If you don't, you won't. But at the end of the day, you want them to pay it all off and own it, right? That's the first thing you said. The other thing that you said that I thought was quite interesting is that you're already in the most affordable sector and you are helping the people who need it the most, and you want to work out with them if they come into a problem. Help my listeners understand a little bit better kind of the mentality of the bank and why you want to work with them so bad.
Yeah, no, that's for sure. Right now for individuals, that come to qualify for these types of purchases, they understand that, you're making a purchase, you're getting a loan at the end of the day, and having all of that conversation up front, is of utmost importance, for the individuals that may be falling into those positions, maybe even in manufactured housing, or it translates as well over to single family. But for them, I think the best possible solution for them is to not put your head in the sand at the end of the day. As long as you're communicative and open to a solution, opposed to putting, not answering the lender's call or not being in communication with the servicing company, those are all hard stops for anyone that made the investment, whether at a private lender or, 21st mortgage, even on manufactured housing or Wells Fargo, whoever it is. They're calling to create a solution. The individuals going behind, 9 times out of 10, they think that there's no possible or turnaround within those programs. You need to have some outreach, because the last thing you want to do is not answer the call. And they were willing to potentially offer you a workout, a one-time workout, not every time you fall behind. But that's really the biggest key for individuals right now. And I think that we get lost, from what had happened that got us off of track of making payments, and understanding that and being comfortable to have a conversation, with the lender. That pays in spades. And we're actually coming up with another program currently through Silvercrest Opportunity Fund for individuals that have high equity upside in their home, that, say with the new debt, they need to reinstate their mortgage. We will potentially structure a private line of credit for that individual. As long as the new debt, the second lien mortgage, doesn't exceed 65% loan to value, we may lend them the money to stay in their property. If they're in a market like Texas, Florida, we've talked about Georgia or the Carolinas, those are all areas of almost kind of rescue loans based on private HELOC, lines of credit, secured second lien on their property. Those are definite areas of opportunity. So you got your two, problems there that could potentially be solved. One, by just some initial outreach to the lender. And two, if those are in one of these markets that we're talking about, we may be able to lend on a second lien, a private HELOC, call it a PELOC loan, and keep you away from losing your house. I think a lot of people have that emotional attachment. They start falling behind on their mortgage. They may have a 3 to 5% mortgage, which is like literal gold out in the marketplace, and they throw their hands up. I don't want to sell the house. I don't have time to sell the house. Those are all last minute decisions. Last thing you want to do is wait till the last minute, especially in a non-performance situation.
Alden, man, you are just dropping gems while I'm over here having technical difficulties. And I'm now on a completely different device because the first device did an update right before we got on and it's tripping. And man, I think I'm about to rename this the, Alden podcast because, man, you just dropping gems. I'm listening to you. I'm like, hey, can you hear me? Can you hear me? And you're just like dropping it, man. So anytime you want to take over the podcast, feel free to hit me up because you can definitely do a podcast takeover, man. So I appreciate you rolling with that, and I appreciate you dropping all that information. So I've heard what you said. My listeners have heard what you said, right? You don't want their house. There's opportunities. There's things they can do, things like that. So when your company, right, is in a situation where a borrower hasn't paid, so you're looking at your monthly report, somebody's 30 days late, then you look at it the next month, they're 60 days late. And then they get to 90 day late. They haven't said anything. What does that process look like for your company on reaching out? And what would you recommend borrowers do who sometimes hit that hard spot where they just can't make, they have more month than they have margin per se?
Yeah, for us as a private lender component, if they go more than 30, 40 days, we've already probably had an either email correspondence or something of that nature just to see what's going on. Because 9 times out of 10, we made a relationship with these people. We're not just some lender at the end of the day. We saved them in a program or created a homeowner, so they know us intimately. So we're really in communication with them which is of utmost importance. Communication is key at the end of the day. So, we'll be in contact with them if they do end up confidentially, going to that next step. We'll do some formal outreach, and our objective is either to maybe possibly throw some balance on the back of the loan or something of that nature on manufactured housing. And single family residents, they may have equity in their property where we could help them get a private loan, based on the equity in their property, not so much their ability to repay, because they have asset base for that collateral type in a single family residence. Uh, but for the individuals that get to that 40, 90-day mark, you need to be proactive at the end of the day as the homeowner. If you just sit back and put your head in the sand, there's no options. That's the death of anything at the end of the day. Losing your job is one thing, having a heart attack, but having upfront conversation and being just truthful and honest about what that looks like sooner than later, opposed to waiting 3 months and you knew this whole time there was a problem. Those are definite must do's at the end of the day. And if worst comes to worst, make a proposal. Propose to the lender that you put a payment on the back of the loan, put those those fees associated with your late payment, and however many months it is, because at the end of the day, the lender's going to have to pay an attorney. They're going to have to go through formal foreclosure processes, and they were in it for the monthly payment. They don't want to own the house. Nobody wants to take your home at the end of the day. There's some bad actors out there at the end of the day, but most people are really just, want that monthly payment. So if you can make a partial payment and they'll allow that, or, really just get in communication and potentially make a proposal if it's last resort, those are definite areas that we deal with at any given time. And worst thing that can do out of a proposal is they negotiate. They take half of that and put it on the loan, and they require half of the balance or whatever it may be. It opens the conversation.
No, I mean, I think you made some interesting points that borrowers need to understand. Whether you are facing foreclosure, or you maybe have just missed a payment, or you think you may be in a situation in the future, or somebody facing foreclosure. The biggest thing he said to me is he said communicate, right? No one is a mind reader, right? You're dealing with hundreds, if not thousands, of different loans and clients and things like that. You also have emails, you have investors, you have colleagues, you also have your own personal life. So you're not sitting up at night thinking about, oh, is Miss Betty paying her mortgage this month, right? You got to communicate what's going on. Number two, as you said, propose something, right? We are not here to fix your problem. You have to fix your own problem. We are willing to work with you. We're willing to help you the best way we can, but we don't know how much you can get. You may propose something and we say, well, that's better than we expected, right? And so go forward with that. But if you just keep your mouth shut, you don't say anything, and you don't act proactively, you can't get mad when the bank comes knocking on the door saying, hey, give me your house. And so I think that you highlighted some key points for our listeners today. And I think you have embodied, to me, what good lenders do. They are willing and open to move forward with proactive borrowers who communicate about what's going on, and they're willing to do creative things like throw it on the back of the loan, maybe adjust interest rates, do different type of modifications, do forbearance plans, which are all helpful to a borrower who wants to keep their house. And that thing about the equity in other assets is something that a lot of people won't even consider. So, you are super flexible on what you're willing to do. And again, I think it just shows that your company is all about helping that first-time home buyer, or that home buyer who's looking for that workforce housing, who's just trying to, grow their net worth through home ownership, which is really cool.
Well, Alden, this brings me to our favorite part of the podcast. It's called our bow tie one. It's where our listeners get to tie one on with our guest, Alden Guajardo, right? Um, the B in bow tie round stands for our best advice for somebody facing foreclosure. The O stands for one thing we're grateful for. And the W stands for our wildest or most interesting foreclosure related story. All right. So, B, what's your best advice for somebody facing foreclosure?
Be proactive, reach out immediately, just be open and honest and upfront of what's going on. Because if you wait until the last minute, you have no choice. The lender has no choice. They've already paid for an attorney or something of that nature. Or even visit, PLOC, PELOCloans.com, and we may lend you the money based on your asset if you're in one of the markets that we work in. But really, last thing you want to do is put your head in the sand because you give them no choice at the end of the day and make a proposal.
Absolutely. You said be proactive and make a proposal, man. I love it. I love it. One thing you're grateful for, brother.
God is good all the time. I'm happy for my family and the connections and relationships I've made. To be in a family business is truly a blessing nowadays more than ever. And, just happy to even have met you at these various conferences, and to build the relationships that we've built over the past couple years, because people do business with the people they know, like, and trust. So for the exposure I'm getting online and, the current time in the market, I'm just happy for all the above.
No, man, that's awesome. And I'm happy for you, man. Last thing, what's your wildest or most interesting foreclosure related story?
So this is a double deal here. I had a lady in a mobile home park in Mesa, Arizona on leased land where she was losing her house to the park. And the park was formally evicting her because of the upkeep on the exterior of the property. It wasn't because she was behind on payments or anything like that. It was because the stipulations within the community, and they can actually foreclose or repossess the unit in order to facilitate that, almost like a CC&R, rules and regs in the park. So I ended up structuring an acquisition from her. I bought her home out of eviction or foreclosure, right? And cured her fees. She couldn't live in the park anymore, so she ended up coming to another property that we had, and we seller financed that home to her. Well, she was on a fixed income, had actually a individual with deep mental disorder, handicap individual that facilitated ownership in one of our properties. Additionally, after we cured her eviction, cured her foreclosure, she bought another property, definitely in a hardship situation, and ended up falling behind on payments this time. And throughout that program, we had, remodified her loan. We even provided her opportunity for some forbearance, and opposed to, being the vulturistic component of just taking the property back, time and time again, we've provided her options in order to keep her home, stay out of eviction, subvert hardship, because for her, she had little to no other options. She literally would be on the street. And we're looking at potentially trying to form some form of foundation for individuals that we find that are in hardships like that at any given time. So we are getting nimble within the transaction. You got to be nimble, in order to operate successfully, mitigate risk as an investor, but also we have a service to provide in this world, and I think we're called to serve at the end of the day. So to be able to get in such a weird transaction like that, where we could have just bought her home and had and made her leave or whatever it may be, was truly a crazy one for sure.
No, man, it's you're definitely double dip. You bought her home, moved her somewhere else, and now you're still working to kind of make sure that she and her family are okay. And that's the hard thing. One of the things we see a lot are folks who are on fixed income. One of the biggest things that people rely on is that Social Security check or that disability check. And that's all they have sometimes. And so trying to work around those parameters can be very, very challenging, and trying to make ends meet with just that income can be very, very challenging, man. So I salute you guys over at Silvercrest Opportunity Fund. Alden, I appreciate what you're doing for homeowners out here, both the homeowners who find themselves in challenging situations, but then the homeowners or the people who want to be homeowners who are just looking for affordable homes to live in, man. I think you guys are doing some great things. I appreciate you taking over the podcast and crushing it. And thank you so much for coming on, man. I really, really appreciate you. And I look forward to seeing you at a conference soon. Anything else you want to tell our listeners? Let them know how to get in contact with you. Let them know where to find you on your socials, man. You got to give a plug for the Silvercrest team.
Yeah, so, go back and view DJ's previous content. The guy's providing unfiltered, free education out online. Again, I'm Alden Guajardo, president of Silvercrest Opportunity Fund 506C. WinMobileHomes.com is the largest dealer of manufactured housing in Arizona, buying, seller financing manufactured homes. You could buy a note today and start cash flowing at mobilemailboxmoney.com. Or if you're in one of those hardship situations and you're in one of the markets that we're working in to come soon, PELOCloans.com will possibly provide you an avenue to gain a loan based on the asset of a single family residence at 65% loan to value with the new debt. And if you don't see something that you like on our channel, mobilemailboxmoney.com, or you want to pick our ear, or you're looking for a home for sale, or you want to invest today, feel free to call now at 602-888-CASH. DJ, it's been a pleasure being on the channel today. Appreciate your time.
Hey, no problem, man. Hey, y'all heard the man. If they can help you, feel free to reach out. They're doing some great things in Arizona around the affordable housing crisis, and they're willing to work with borrowers who may not have the best credit and who just want to start. So, for those of you who may have been through foreclosure and you're looking to get back in the market in the Arizona area, they're a company you should look into. That being said, thank you so much for checking out our podcast today. I really appreciate it. You know what to do. If you like the content you heard today, like, subscribe, or share our content with someone who you know can benefit. It helps the algorithm, helps us get great guests like Alden, and most of all, it helps people in their time of need. As always, my name is DJ Lojo. I love you, and God bless you. I'll see you soon.
The views and opinions on this podcast are for informational purposes only and should not be construed as legal advice. If you have a specific legal question, we highly recommend you contact a qualified legal professional.